Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday, March 13th. This will be our chart lesson for today. I'm going to do this one fairly quickly and try to get this over with. It's a little late today. I was hoping to be out here a long time ago. It's the market just now closed just a moment ago, and I would call this kind of a range day, but for the most part, we trended up almost all day. And this was the first real break of the trend line. And notice we were heading for the retest when the market closed. Um, so perfect rules, easy to follow. If you couldn't find that trend line and find that channel, then you got some work to do. This was the overnight high. This was the overnight low. We got a tick or two below the overnight low, and we got a few ticks above the overnight high. So for the most part, we spent 90% of the day within that probably 8-9 point range there. So it's kind of a range day. But we did spend most of the day trending up, and you can see that EMA is clearly pointed up, and most of the price action was above that until we finally got up here and got an overshoot of the trend channel, an overshoot of the overnight highs, and then we got it. So that led to the break of the trend line, and then we're working on a second leg up to a retest, and that's close enough really almost to be a two-legged correction. When the market opens again here at 3:30, I would be shocked if we probably don't go a little bit higher and make a new high. We'll see what happens. But also another thing, somebody sent me an email asking me, wanting me to put arrows above all the to point out all of the signal bars. And I know that seems like a minor detail, something easy to add, but somebody asked me to add something new every single day. And, you know, if I start adding everything, it'll take me hours to do this. So rather than take the time to go back and put an arrow on all of these, I'll just point the signal bars out. It's always going to be the highest bar of the swing. At least that's where your stop's going to go. Sometimes your signal bar might be like this bar right here. It's an inside bar kind of, but still your stop goes the same place. But I'll point out the signal bar just to help you find it, make it a little bit easier. So let's go back and talk about the first trade. We started out in this downtrend. We had this break, this news-related break, and we got this little overlap here way away from the EMA. We broke higher, trapped a lot of longs up here near these highs. Notice that reversal bar. You got to consider that one because you're looking for a possible retest anyway. Put your stop there. It took it a couple of minutes to get going. You might have let yourself shake out with a tick or two out of that one, but if you'd held on, it would have worked. And of course, there's your signal bar. Your stop goes up here. If you could have ridden this all the way to the lows, even on the correction. But that's why we use those areas, because they're logical. They help protect your stop. And then no runners on that one. They came back and got the runners, but then you get another chance to enter here. And this is on a second entry. Notice that the high of this bar, the signal bar right there, that doji, is kind of matching these other closes up here. That's a good sign, and we break lower. Do you know it's going to take off like that? No, but it did, and that's why we hold a runner. And any runners were easily safe on this. You could have ridden it all the way down here, and a great place to think about exiting is right down here at the previous lows. And if you'd have done that, you'd have got out within a couple of ticks of the low, and then you had a two-legged correction right here. It didn't quite get back to the EMA the way it ended up, but at the time it was almost touching the EMA. This move higher here is what pushed the EMA a little bit higher. But at the time this trade triggered, it was almost touching the EMA. It was real close. So it was close enough based on what we normally look at. It's a second entry. I would have liked to have seen it close on its low, but that could have easily closed one tick lower. A two-legged pullback to the EMA. We didn't quite have a new low yet. We were real close. We were close enough to probably consider that a retest, but the market was really weak right there, so it didn't surprise me that we would push down and try to make a new low, and we did. So easy scalp. And what I did was drop my limit order in rather than enter on a stop there. I dropped a limit order a tick or so, but I think I did it one tick back into that, and you can see it got filled and then it turns back down. So that's just something to consider. Wait on it to break first and then drop your order. And sometimes they'll move too quick to do that, and you got to enter on a stop. So you just don't have any option. But then we broke and made a new low. You don't want to be thinking about going long yet, but notice what we do here. We make a higher high, but still the bias is down now. There's a chance that we may make another leg down. If you measured this leg and then this one, the low should have, we were looking for was the target was possibly down here another tick or two. We didn't quite get there, but that's a big bearish bar. And this is a good example of what happens sometimes when it opens right there. The best you could do, you couldn't enter on a stop waiting for the bar to go first because it opened right here and wouldn't let you put a stop in. So just wait on it to move a little lower or pull up a little bit and then drop a limit order in. Or actually, if it pulls up, you got to go ahead and use a stop again. But while it's ticking on down, as soon as you can, drop a limit order in there and see if it'll come back and get you. And if it does, then you're able to ride this on down and get an easy scalp. Nothing more than that, no runners. But this is kind of a reversal pattern. We had a double bottom. We went a couple of ticks lower, and notice the higher high right there. It's higher than that high or that high. That's a higher high. It's above, prices got above the EMA. We turn down and we make a higher low now, and that's a second entry, and that's a little two-legged correction. But even counting off the bottom on the bigger pattern, that's a second entry long. And you got to figure we're probably going to at least come back up here and test these highs. So easy scalp. You didn't get any runners there. They would have come back and got your runners. But guess what? You get a chance to enter again here. And I tried to enter on a limit order here. Couldn't get it filled. Prices didn't fill the order. But notice when it ticked lower and then turned up, when it goes out the high side, if it's still in the same bar, you can go ahead and put a stop right there. Otherwise, you had to wait for right here, and then you're really getting back up here close to the line. So I liked, entering here with a stop, and it filled it real easy, quick scalp. I got a couple of extra points on the runner, maybe an extra point or so on the runner, and then guess what? It comes back and gets the stops. But then you got another two-legged correction, a chance to get long. Again, I tried to get long on a limit order here, but couldn't get it filled. Okay, I'm sorry. I had about a 15 or 20-minute interruption there talking to my accountant. But I can't remember where we even stopped off. I have no idea. I got completely lost track here. I believe we talked about this trade, the break below, and then so your stop goes here, no runners. Well, you could have gotten, if you're like me, you probably got a few points, more than a point out of your runner, but you should have been thinking about exiting up in, all this congestion with us touching the upper side of the channel here. And then we sold off, and notice all these matching lows here. We broke lower, we reversed, but no signal there. You had to be thinking probably coming back to the trend line. I didn't know we were going to break it here, but we did, and you got these matching lows. I tried to get long with a limit order here, couldn't get filled, so one, a stop, one tick above. This is your signal bar, this little bitty doji. Stop goes one tick above it. Your signal bar on this one was actually, turns out to be this bar, but you can enter early on this bar, but your stop still goes below this bar right here. That's your signal bar. Your stop goes below this signal bar. You go long right there. And this trade and this trade were the trade of the day. They made me most of my money today because your runners survive and you ride this all the way to the top. Great trade. These two runners made me quite a bit of money here on my runners on those. Nice setups. I drew this one in green because it's a little risky entering on the first move down, but that's a great setup right there. And you just have to think about, is there enough? You probably had to think about that 2-bar matching low, and you probably had to think about the EMA. So is there enough room to get out by entering one stop below that? And that's what that was my thought process right there. If I enter right here, is there enough room to get out? And there wasn't. So what I did was drop the limit order back in here, and it ticks back, it fills me, and then I got enough room to scalp out, and guess what it got? 1, 2, 3, 4, 5 ticks exactly from that entry. So if I'd have got in 1 tick shorter or later than that, it would have been a 4-tick failed entry, but you still could have got out and got a tick or two, especially when that ended as a doji. And so you could have got out and still got a tick or so. Um, you know, but I drew this in green simply because the trend is up, and that's a counter trend. No matter, even though there's a high here, we're trending up, so the bias is up, and you can see that coming into place because we bounced off the EMA and made a higher high. And so and you notice here we're working on this retest still. There was no break of the trend line yet. We're in this channel. All you're thinking about here is a scalp. You're not looking to really try to get any runners probably because the odds are not very good for you because there's been no break in a retest yet. Then we made a slightly higher high and turned down, and guess where we're headed? Back to the other side. And but there's actually a long here. And I drew this one in green because we aren't back to the trend line yet. We just came off a failed break higher. We came off a huge move up. We're overdue some correction here. But guess what? This is a two-legged pullback to the EMA. And you can see that one leg, little pullback with that little doji in the middle, and then another leg. And if you went to a smaller chart, it's clear to see. You need to learn to see this on one chart, though. And easy entry right there, easy scalp. It took it just a second to kind of take off, but another fairly reasonable scalp. Again, I drew it in green because it's a little more risky because of the reasons I just said. We had the failed break higher on a possible range day. But it's such a nice bar, such a nice setup, and then it's a nice reversal bar the other way. So they're both great entries. They're a little more risky, though, so I drew them in green. Doesn't mean they didn't fit our criteria. Doesn't mean you couldn't take them. But what I would, when I say it's a little more aggressive, you need to be able to understand price action really well to be taking those kind of trades. If they're not red, or if they're red or green, that's what the average person should be taking and entering. This is your signal bar here, and this green reversal bar is your signal bar on this trade, and your stop, of course, goes right above those signal bars. I would have liked to almost mark this as a short, but still there's no break of a trend line, so it would have been just like this, but we never really got a good setup. Notice the two dojis overlapping. Then we had a third one here that just barely ticked a tick lower and then closed back inside that, so not a good setup. And you can see it was kind of choppy all the way down. You did get a reversal bar there. Again, it was kind of tempting, but you don't want to be going high against this resistance here until it proves its support, and it hasn't done that yet. So you might have considered going long right here if this would have set up, but it never set up or triggered. This was the first time that we kind of got a setup. We got those two matching bars. I didn't take this trade. If I had, I would have tried to enter on a limit order here. I was done by this time, but your your entry bar is right there, and you can see it was a real quick, easy scalp. And then they come back and get the runners, but you're looking for a retest, and you're hoping that maybe you get a runner that rides all the way to the top and up to a new high. And that was it for today. A lot of good entries. It's when it gets down to here when it gets dicey, and you may skip these if you're not sure. The easy ones are the ones that set up at the highs and the lows and off the trend lines. And if you just wait on those setups, you got to be patient and wait on them, and they come along. It might have been, let's just see how much, let me just show you here. This trade set up at around 9:11, and your next one didn't set up till 9:37, after 9:37. So, you had to wait about 20 minutes on that one. So from 9:37 to 11 something, you had to wait an hour and a half for that one, but you got to be patient and wait on it. And then from that one, 11 o'clock, the next one didn't set up till 218. So, you know, there's quite a bit of gap in those trades. There were a couple in between, and there, you know, you might even consider shorting that one right there, but that's counter trend trading, and most of you will probably lose money because you could have tried it right there, and guess what? You would have probably had a loser. And generally what I do is I wait on, but if I'm going to short, I'll just share this with you. But don't, you know, you might look at it and work on it, but don't go start trying to do it with live money. But wait till you get the touch and then another push above it that fails. And you can see this is just a repeat. This pattern right here is a repeat pattern of that. And guess what? When you see it work once during the day, it'll generally work again. And all we did was we made a new high. Right here we made a new high. Then we pushed slightly above it and then we sold off. Look right here, we made a new high. We pushed slightly above it and then it sold off. And it overshot the trend line again, just like it did here. So remember when you see those repeat patterns that you may see them again. And this pattern right here is similar to this one and this one. Look at it. There's a move up and then you come back and you get caught up in this little congestion and you tick lower and then turn up. And it did it right here. You move up, it comes back, it gets into this congestion, it ticks lower, and then it shoots up. And you moving along, you make a new high, you pull back, you go in this congestion, it breaks lower, and then it shoots up. So those are three, even though they don't look exactly alike, if you started analyzing the way they set up, they're very, very similar trades. And they're what I call repeat patterns. And when you see one, if you see it again, it's apt to work the exact same way. People remember it. They said, hey, it worked over here. Why won't it work here? And then it worked here and here. Why won't it work here? And it worked here, here, and here. Why won't it work here? And it does. And notice too that each one of these pullbacks, this one pulls back further than that one compared to where the lows are. This one pulls back further than this one did. So the pattern is just getting a little bigger each time is all that's really happening, but it's the same similar type pattern. It's nothing you want to trade off by itself, but if the setup's there and you saw a very similar setup earlier, then that's what I call a repeat pattern, and it's worth paying attention to. So if I have time today, I'll probably start on it today, but it may be tomorrow before I finish it. But what I want to do is I'm going to go over second entries again. And people have so much trouble with second entries, and I think it's just because they try to make them too hard. And a second entry is simple. It's so simple. It's amazing that I don't hear more people talk about them than what you do. You'll hear a couple of price action type traders talk about them. They're nothing magical. They're nothing really hard to spot, but people just don't get it, I guess. I don't know, but people try to make them into this magical thing because they work so well, but they're just real simple. And really all we're doing is we're looking for two legs in one direction, and you start correcting, and then there's your first move up. There's your first. Every time when the prices are going up, you're looking for second entries with that upward trend, and when prices are coming down, you're looking for a second entry to the short side with that trend. And so each time you make a new high, the count starts over. You got a new high here. There's your first entry. You never got a second entry because you got a new high first. So there's your new high. There's your first move down. There's your first entry. Then you pull back here. And when you go lower, there was actually a second entry there, but this was the better one right here. You notice that move down, move up, and then we moved down. We never went higher, though, and then a second entry short right there. That one's a little harder to see. Then you come up, you make a new high, so the count's over. There's the first break lower, first entry, then you kind of pull back right here, and then there's a second move lower, second entry. But actually, you're looking for them in the other direction now. That's where I was messing up here. When you came up, there's your first entry long, and then you move down, there's your second entry long. So I was actually showing you the backward second entry. And that's another thing. You can count off both ways at the same time. So let me start over here. You make this new high, and you're pulling back, And notice there's the first bar that went higher than any previous bar. There's your first entry. Then you start working lower again. And then there's a second time that prices ticked higher. That's your second entry. And then you come up here and you make a new high. You start correcting. And you can't see this one because the charts, but if you went to a smaller chart, you would see a tick higher here and then a pull back and then a tick higher there. So that one's, let me see if I can find another real clear one. There's just, well, you've got this one here on the downside. Let's show you coming down. You got, every time you make a new low, the count starts over. And so you got a new low right there because that low's lower than that one. And you pull back, and there's the first bar that breaks lower. There's your first entry short. Then it pulls back again, and then it ticks lower right there, your second entry short. And so that's all there is to it. You're just looking for a two-legged correction, and there it is. One leg back, pull back, second leg back. So that's a second entry short because that's after the second leg back. Right here, you got one leg down, pull back, second leg down. So you got two legs down. So when it goes higher, that's got to be your second entry. Same thing here. One leg down, pull back, second leg down. So all you're looking for is two legs in one direction. And they're not always equal, and they're not always perfect. But it's just basically looking for two moves of a correction and then the trend continue. That simple, really. I'll do another video on it where we can find some really good examples and stuff. And I'll try to put that on the website. So, but I'm going to wrap it up. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.